The Department of Justice sued Apple on Thursday, saying its iPhone ecosystem is a monopoly that drove its astronomical valuation at the expense of consumers, developers, and rival phone makers. The government has not ruled out breaking up one of the largest companies in the world, with a Justice Department official saying on a briefing call that structural relief was on the table if the US were to win. The lawsuit claims Apple's anti-competitive practices extend beyond the iPhone and Apple Watch businesses, citing Apple's advertising, browser, FaceTime, and news offerings. Apple shares fell more than 4% during trading Thursday. A breakup of Apple, if successful, would be one of only a handful of breakups under the Sherman Act. The DOJ has considered using it in other antitrust cases, but has not done so since the breakup of the Bell system in 1982, the precursor to AT&T and Verizon. The Justice Department said in a release that to keep consumers buying iPhones, Apple moved to block cross-platform messaging apps, limited third-party wallet and smartwatch compatibility, and disrupted non-App Store programs and cloud streaming services. The challenge represents a significant risk to Apple's walled garden business model. The lawsuit could force Apple to make changes in some of its most valuable businesses. The iPhone, in which Apple reported more than $200 billion in sales last year, the Apple Watch, part of the company's $40 billion wearables business, and its profitable services line, which reported $85 billion in revenue. Apple said in a statement that it disagreed with the premise of the lawsuit and that it would defend against it. The lawsuit follows years of investigations into Apple's business practices and 2 prior DOJ cases against Apple. One over e-book prices and another over allegations that it colluded with other technology companies to depress salaries. For more educational videos, subscribe. And as always, take care of your money.